Dear investors, welcome back to Market Ka Gyaan. I am Narendra Solanki. Today we will discuss three strategies which outperform the markets. But before we start, don't forget to hit the bell icon and subscribe to our video in order to get timely updates. So let us start. Basically, there are many strategies in the market. As there are many players, the strategies are also many. But here we have brought you top three strategies which outperforms the market and which are used by the best known minds in the stock markets. So what are those three strategies? So let's start. The first strategy is concentrated strategy. Yes, the concentrated strategy, which is also known as high quality business strategy. The second strategy is special situation strategy. And the third strategy is the diversified strategy, which is growth at reasonable prices. It is also known as growth at reasonable prices. So now let us learn about what are these strategies are all about, and let's have some details about these. So the first is concentrated strategy. So this is what most investors like Warren Buffett associate with. It's probably the dominant strategy in the market, and almost most of the investors are using it today. And at least if we look at the big players, they are using it, these strategies. In this strategy, what happens is that you own basically 5 to 8 or at most 10 top quality businesses which have consistent long-term track record of sustained earnings growth and sustained market growth. That means stable growth plus good cash flows. The business must have competitive advantage and a strong balance sheet as well in order to earn long-term gains. So any stock which is fulfilling these criteria can be clubbed into this strategy. The second is special situation strategy. It was popularized by Joel Greenberg, and you can see it in his book. In that book also he has written it in very well manner. So it's about finding situation where businesses are momentarily underpriced or overpriced and getting a gain out of that underpriced or overpriced by analyzing the business into deeper manner and taking a bet against that. So those could be spin-offs, restructuring, mergers, or anything which is impacting the company in terms of its business, market share, growth, as well as earnings. So any stock which is fulfilling these type of criteria can be considered as a part of a special situation strategy. The third and the last is the diversified strategy, which is growth at reasonable prices. It is similar to high quality business approach, and it doesn't has to be more diversified. However, we have to make this assumption that the concentration is not the only way to outperform. You can use the high quality approach in both ways. This approach is little better suited for diversification because you look for the businesses with higher growth expectations. So often this comes with more risk of individual company level. So that's it all about the three strategies, but all these three strategies have their own pros and cons. And we will discuss these pros and cons in our next video. So stay tuned. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.